9 get-rich tips from Warren Buffett. Let's have a look. Hello everyone, Florian Heiser here, and welcome to another episode of Heiser Says. Grab your stein of coffee, because the annual shareholder letter from Warren Buffett has come out, and I thought we'd have a look at some articles that Yahoo Finance has written about them. 9 get-rich tips. I added quick in there. That was a reflex. Too much YouTube watching. Get-rich tips from Warren Buffett. Somehow, I don't think it's going to be quick. What do you reckon? What do you just a guess I'm making there. So let's have a look. Every year, the Oracle of Omaha passes down sacred knowledge to his shareholders in the form of a letter. I mean, I've got one thing I'll just bring up here. Where is it? Here's his letter. And this is what's really interesting is Berkshire's performance versus the S&P 500. So you can see in 65, in per share market value of Berkshire, it was 49.5%. The market was 10. And we go all the way up to here. The overall gain from 64 to 2020, it was 2,810,526%. Well, the S&P 500 is 23,454. So he must, he knows what he's doing. I didn't realize it was just that high. This is insane. Just insane, guys. I mean, look at that. There you go. I mean, if you go back in time to the 60s, just buy shares in that. That's it. That's all you need to do. All you need to do. So let's have a look. For decades, Warren Buffett, one of the most successful investors of all time, has bestowed nuggets of wisdom in his trademark plain-spoken style through his firm Berkshire Hathaway's annual public report. To call it an eagerly anticipated document would be a bit of an understatement. The 2021 edition of the letter was released on the February 27th. Observers in finance, politics, and the media had hoped that Buffett would refrain from public comment for most of 2020, or who refrained from public comment for most of 2020, would try to make some sense and some dollars out of the pandemic. The election, the GameStop trading frenzy, and all the other craziness currently shaping American life. But true to form, Buffett's letter didn't talk about any of that, instead outlining his major and surprising strategy of repurchasing $24.7 billion of his own stock last year, something he generally advises against, and admitted he made a mistake 5 years back with the $37.2 billion purchase of Precision Castparts Corp. Even if you can't afford a whole 330,000 Berkshire Hathaway share, with the help of your investing app, Buffett's letter is always a worthwhile read for investors of all walks of life. Let's get into some of Buffett's letter's historical highlights. So his top tips over the years. So Buffett's most significant lessons can be broken down into 9 themes. Number 1, C-suite, not so sweet. In 85, Buffett said he used an incentive compensation system at Berkshire Hathaway that sees managers rewarded for their individual contributions over the year regardless of the company's overall performance. If they did get great in the middling year, they'll reap the benefits. And if it was their work that was middling in a great year, they won't be rewarded. We believe good unit performance should be rewarded whether Berkshire stock rises, falls, or stays even, Buffett wrote. Similarly, we think average performance should earn no special rewards even if our stocks should soar. Buffett also acknowledges that performance means something different based on the specific business. In some, our managers enjoy tailwinds, not of their own making. In others, they fight unavoidable headwinds. But compensation from Buffett will never come in the form of stock options. Not only does that dilute the shares, executives can leverage their understanding of the company to add to their wealth at the expense of shareholders. Well, that's a very good point, isn't it? And I think we're seeing a lot of that in the market. So, locked up in stocks. Buffett is famous for his slow and steady approach to investing. There you go. It's not get rich quick. He doesn't believe in owning stock you don't believe in and fussing over a share's daily movement. Many people have been inspired by the recent GameStop saga to adopt the gun-slinging approach of a Robin Hood-toting Reddit day trader, but that's never been Buffett's way. If you aren't willing to own a stock for 10 years, don't think about buying it for 10 minutes, he wrote in 96. And while he once overlooked intangible qualities like reputation and brand, in 83 he revealed, "That bias caused me to make many important business mistakes of omission, although relatively few of commission." So bull or bear, follow your gut. Buffett is adamant that the price of a stock is one of the last things you should consider when deciding whether to buy or sell shares. What matters is the company's underlying value. Because even though prices, as he put it in 87, are subject to the emotional whims of Mr. Market, whose moods tend to move up and down on a daily basis, prices will eventually catch up and reward companies that bring value. That applies especially when the market is being irrational, and he encourages investors not to worry about looking unimaginative or even foolish when standing in their convictions. Furthermore, he suggests making market volatility work for you. In 2016, he offered this pearl: if you see that the skies are about to briefly rain gold, you should rush outdoors carrying wash tubs, not teaspoons. Remember that next time you're wondering whether it's time to put money, even just a little bit, into the market. Simple, not sexy, is successful. Buffett likes to invest in companies that invest in their own growth or use corporate capital to buy back stocks. Even if it doesn't pay off in the short term, he believes strongly that companies holding back some of their earnings from shareholders to put back into the business helps grow their value over time. That being said, Buffett, to be enticed to invest a company, has to be simple and often not sexy. He famously avoids buying into businesses he doesn't understand. When he and his business partner, Charlie Munger, personally welcome change in the form of fresh ideas, new products and innovative processes professionally, they're more wary. As investors, however, our reaction to the fermenting industry is much like our attitude towards space exploration. We applaud the endeavor, but prefer to skip the ride. More importantly, they choose to invest in companies that make things people need, that might not be exciting, cutting-edge investments, but are certain to offer returns for years to come. Don't trade the cow for magic beans. While some companies jump at the opportunity to take large positions in struggling companies, Buffett favors smaller positions in strong firms. It's better to have a partial interest in the Hope Diamond than to own all of a rhinestone, he wrote in 2014. But he doesn't believe you should invest in a company solely because you believe it will grow. Value should always be your guiding principle. And finally, you should avoid giving away more than you receive, a mistake Buffett said he committed when he made a bad deal with his own stock, which cost shareholders $3.5 billion in 93. Progress marches on. Buffett believes strongly in the economic future of America, and while pundits have been bemoaning the decline of the US for decades, he sees it as the country simply becoming more efficient. In a 2010 letter, he rallied the American citizens' lives. He relayed that American citizens live 6 times better than when he was born in 1930. That expansive view of history translates into investment strategies that deliver steady, reliable returns over the long haul towards retirement. He picked up the theme of Never Bet Against America in 2021 edition of the letter. In its brief 232 years of existence, however, there has been no incubator for unleashing human potential like America. Despite some severe interruptions, our country's economic progress has been breathtaking. 7. Stick to your own pace in the rat race. Like a sloth, Buffett makes moves only when he has to. In his 96th letter related to investors, that they'll be better served by buying a few reliable stocks and holding onto them rather than trying to buy and sell at pace with the market. So the same logic would apply even if you're just buying pieces of stocks. He also encouraged investors to trust their assessment skills of a business rather than with complex financial instruments or the recommendations of investment bankers who have their own motives. And when you invest in a company, time will tell whether that was a worthwhile investment. Time is the friend of the wonderful business and the enemy of the mediocre, he wrote in 89. 8. Culture Club. Despite being one of the country's wealthiest men, Buffett lives modestly, and he believes a leader who is careful with his money and doesn't push for exorbitant compensation will encourage a culture of employees who are careful with their investors' funds. Winston Churchill once said, "You shape your house, and then they shape you." That wisdom applies to business as well, he wrote in 2010. Bureaucratic procedures beget more bureaucracy, and imperial corporate palaces induce imperious behavior. As long as Charlie and I treat your money as if it were our own, Berkshire managers are likely to be careful with it as well. Part of what contributes to Berkshire Hathaway's top-notch culture is who Buffett seeks out to hire. In a number of his letters, he has reminded shareholders that he seeks out managers who are often independently wealthy and don't need to work. Then Buffett creates the best possible work environment for them, ensuring they love what they do and make it so they can never be lured away. So if you're someone whose job involves hiring, make sure your next job posting talks about what you want your employees and why someone want it. I mean, you can see they're adding things in here to cross-reference to other articles. It's interesting. 9. You usually can't dig yourself out of a hole. Unsurprisingly, as a careful investor, Buffett discourages anyone, but ordinary people especially, from going into debt to invest in the stock market. The swings of the market can leave consumers broke if it takes a sudden downturn. And this is why I'm seeing in the crypto sphere, people are like doing insane amounts of leverage in crypto, which such a volatile market just is terrifying. I can't believe people are doing it. So, but that doesn't mean he's entirely against using debt. Buffett does advocate borrowing money when it's cheap to put the money to good use. With Berkshire Hathaway's risk threshold and structure in mind, Berkshire primarily uses debt with an asset-laden railroad and utility business, which still generates plenty of cash even during an economic downturn. The common threads in Warren's written wisdom. At the end of the day, even Buffett has made his share of mistakes. But with his focus on steady long-term growth, he always makes up for that over time. So even if you're new to the game, don't get discouraged by the regular ups and downs of the market. In fact, Buffett discourages new investors from checking their portfolio every day for that reason. Instead, make sure you take the long view and focus on long-term plans like retirement. Focus on slow and steady growth. Invest only what you can afford. If you follow this advice, maybe one day you'll be passing along your own pearls of wisdom to your own adoring shareholders. Perhaps. So what do you think, everyone, for these pieces of advice from Buffett? I think slow and steady is really the takeaway there. And that's the problem with all the trading apps and things and CFDs. You can really get swept into it. Checking constantly. That's why my focus this year on my pocket money investing is simply dividends, boring dividend stocks. I'm just targeting US stocks that pay dividend. Okay, if we get hyperinflation that blow up, I'll still get paid hyperinflated US money. We'll see. Anyway, guys, let me know your thoughts and opinions on Buffett's tips. What do you do and what do you think? As always, thank you all for watching. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I produce here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heiser Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.